Well, it's been quite a higher day over here in the grain markets. Let's go to the futures provided by Bar Chart here on the Market Day Report. We've got this corn market still gaining with July up 21 1/4 at 7.01. We've backed off of the high of 7.04 by 3 pennies, but we're still up there toward the top end of that trading range. And December corn is up 18 pennies. Then when you look at what's going on with the soybean market, well, it's also higher, but not keeping up quite with corn. July is up 11.5 at 15.35.5, and November is up 17 1/4. New crop July Chicago wheat 9 1/4 cents higher, 7.27 1/4. Still not the high on the day. Kansas City wheat for July up 11.5, right at that $7 level. And July Minneapolis wheat is up 8 cents at 7.66 3/4. But there is pressure in the cotton market, and we've come off of the lows of 86.36 earlier. Now we're at 86.89. We're down 97 points, but we, as I mentioned, off of the low there just a little bit. Ted Seifried, Zaner Ag Hedge, is joining us now. Ted, what about today's action? It's been quite a day. Is this related at all to what we saw in the national planting progress?
Not really. I mean, because planting progress came out better than expected, especially for corn. But look, I mean, we had a almost 30% jump in a week. When we were having the same conversation this time last week, I was saying, hey, we're going to plant 30 to 40% in a week. And we did. It was better than expected. We're moving and a shaking. But it's the South American forecast, the drought monitor expanding in Brazil. It's another day of no rain in the forecast. And the market's really excited about that, and put that together with the fact that we've got some really dry areas here as well. Now, it's a little early to be terribly concerned about that, but Iowa can't seem to buy a rain right now. And that's really reminiscent of what we had going on last year. And, you think about all the times that people have been saying, hey, we might see some pretty significant cancellations for corn, especially from these Chinese purchases, or we might roll it into next year, or so on and so forth. But until that Brazilian forecast changes, or until we stop lowering our estimates for what that Brazilian second season corn crop's going to do, you can't imagine China's going to want to cancel corn because it's higher every day. So, yeah, the market's just kind of feeding on that South American story, the tight situation that we have in old crop, the concerns that we have about weather for our growing season, even though we're getting planted at a very solid pace, and I think we'll continue to do that. You still have a really bullish market right now, especially for that old crop.
One more quick question before we get over to the livestock side then is Jeff Womack, our meteorologist, just showed some cool weather, highs in the 50s for the Corn Belt. Right. Is anybody in the trade talking about possible frost?
We're not really seeing a whole lot of temperatures that fall below 40 for any extended period of time. At least that was the latest forecast that I was looking at. Maybe Jeff has a better idea on that. But I don't feel like we're terribly worried about that at this point. Yes, it's going to be will be fairly slow in emergence, but that's not necessarily a bad thing. So no, I really don't think that is a frost scare that we're seeing right now. This is more of a dryness scare than anything else.
Good point. Okay, we'll come back and look at the livestock trade. Don't go anywhere. Ted and I'll be back on the other side of this break here on the Market Day Report. There's a lot of people in the trade talking about a $300 choice box beef number. Well, we hit it today at noon. $300 and 17 cents to be exact, or 71 cents, I'm sorry. That was up $1.41. Ted, that is a pretty tall number. And if you look at selects, they're not that far behind. What is that telling us about this beef complex, do you think?
Hey, rocking and rolling. I mean, that domestic demand is really very solid. We've known that. We really haven't had any concern about that. But then look at what the live cattle chart's doing. I mean, it really is acting like it wants to break out to the downside. Today is not a good day after trying to defend these recent lows and a key support level in the last 2 days. And now we're testing it again and threatening like we want to extend this lower. But look at the feeder cattle chart. That's what's kind of leading the complex at the moment. And every day that we have this corn trading 20 cents higher and beans sharply higher, putting a tremendous amount of pressure on the feeder cattle. And that's dragging the live cattle complex as well. We also haven't seen the big gains in cash that we thought would be associated with the better box beef prices. It just hasn't materialized. So that's kind of holding us back. If we saw an advancement in cash, I think we would get the live cattle market to respond to that. At some point, I want to say inflation should affect that as well. And your speculators that have been inflation crazy about buying corn and crude oil and silver, platinum, palladium, really everything. I want to see that happening in the live cattle market too, but if we're not paying higher cash, then it really is a limiting factor, and that's really what's been the problem. And again, you have to be concerned about what that chart looks like, the weights that we have right now. There are some negative fundamental factors that are really in focus when you have that feeder cattle coming down every day and the corn chart looking like just sharply higher every day.
Well, and we've seen some 119 being paid already for some of this cash. Now, it was a big number of cattle yet, but would you have thought that maybe that had put a little bit of a floor under this fat market?
I don't think that we're going to get terribly excited until we see some 120, 121s, 122s. The bigger numbers up in the 120 range that the market's been looking for months now.
Well, and we do have asking prices up there around 120. Look at what's going on in the hogs. It seems like that market kind of catches its breath and then surges higher again.
Yeah, the last pullback we had was after we had ventured into new record high prices or new contract high prices, and we pulled back from that. It's a very typical thing to do. I had a lot of people ask me, was that it for the hogs market? The answer to that was no, is no. We continue to go higher. But now, listen, we are starting to get really rather overbought at this point. So you could see a day where we have a little bit of softer, maybe in sympathy with cattle, something like that. But overall, that hog market looks good. That chart looks good. You are seeing that inflationary buying happening in the hogs. So far, the hogs have not been deterred by higher grain prices. At some point, I worry that that is a limiting factor. But at least for right now, chart looks really good. Fundamentals are good. Domestic demand is solid. Export demand has been solid. We're hopeful that Chinese demand really comes in a bigger way in the late spring and early summer months as well.
All right, Ted, see you tonight on the Rural Evening News. You take care until then. Tammy, back to you.